In this video, traders, we're going to look at 8 volatile US stocks that are well worth sticking in your watch list. Stay tuned. Hey traders, warm welcome to you. All right, so there's loads of stocks out there in the universe, specifically we look on the US exchanges. However, I like to prune down the stocks that I'm watching to about 10 to 15, maybe less. I try to keep it as small as possible into some of the more volatile stocks that are really kind of good for day trading, good for swing trading, and good because they're kind of moving a lot. Now listen, volatility may not be the thing that's right for you. You may be looking for some kind of stocks that are a bit slower, a little bit more steady. But if like me, you like volatility, you like to see kind of big moves, big swings, then this list of 8 stocks is certainly going to tick the boxes. Well, it is at the moment. And it's really because these are quite new, if you like. And when we get earnings, when we get kind of sentiment changes, there's big shifts in money flow. You might ask me, well, why haven't you got some of the things like Apple and Amazon on here? It's because they kind of a bit more cemented now, and the longer standing, not so they're not volatile, you know, these tech stocks, they're all reasonably volatile. But once you get companies that have been chugging along for a while, they kind of sit in their own little groove. And yes, the earnings do change stuff, and we do get gaps, we do get kind of big drives and moves, but not as much because it's not as exaggerated. They've entrenched in the market, and they kind of, we know what they're doing. They kind of, maybe they grow a little bit more, maybe they don't sell as many iPhones, maybe Amazon ships more packages, but it's not massive swings. Whereas some of these stocks here, because they're relatively new companies, I say relatively new, but you know, new technology, it's like it's a bit more all or nothing. Now, all of these you can trade via our channel sponsor, guys, which is Core Spreads Australia. There's a link to them in the description below. And if you're using the Core Trader 2 platform from Core Spreads Australia, then most of these are around 7.5% margin. So it means you can really kind of use that leverage to your advantage if you choose, and accepting the risk that comes with that. All right, so let's look at the companies. So the first one I've got for you guys is Uber. We all know Uber, taxi app, reasonably new IPO depending on when you're watching this video. But there's a lot of headwind from kind of taxis, and especially in London, for example, you know, they're kind of pushing them out of London. They lost the license, get a license back, you know, so it's not a clear thing for them. Yes, it's great for the consumer. You may use Uber as well as I do. Easy, convenient tracking, but it's not a clear thing for them. There's a lot of resistance from taxi companies. There's a lot of resistance from some countries as well to get them in there. And so it's interesting to see the chart is swinging around. Legislation comes out, gaps it down, gaps it up, not to mention earnings. So good volatile stock to be watching. Next one, of course, is Netflix. Netflix been around for a reasonable amount of time, but again, it's all about subscriber numbers for them. How many subscribers are they adding to their subscriber base? One of the biggest, if not the biggest, subscription-based services out there, and they've done really well. They've just changed the trend of how we consume media, right? And thanks to technology, broadband, high mobile phone speeds, all that kind of stuff, they're now a relatively new company. And so they are swinging around. They're probably maybe the least volatile out of all of these, but when they get going, they really do. And it's purely because if you start to see subscriber numbers growing, or let's say they spend a lot of money on producing content that doesn't go down well, you know, we start to see a swing in supply and demand. So that's well worth putting on your watch list. And then we've got Fitbit, the wearable fitness tracker. This has taken a hammering recently, but this is a new trend as well, a wearable device, new technology. People are improving their health and fitness. Does that affect the chart? Of course it does. You know, if they come out with a new product that is just blockbuster and it's a new model and it just takes it by storm and suddenly gets a lot of traction, bang, you're going to see suddenly a massive amount of interest in it. If other companies like Apple and other wearable companies start to dominate, of course it's going to get hammered. So good, interesting chart to watch. Twitter, social media platform, you're aware of that. Super volatile. They don't seem to have got any real traction yet in terms of monetizing the platform properly. But that's the key thing. That's what makes it such an interesting chart, because their earnings are suddenly up, their earnings are suddenly all over the place. And we're waiting to see where they fit in with the big boys, Facebook, Twitter, Snapchat, which we'll get to in a moment, Instagram, where they fit in. They've got a groove, but have they really got traction yet? Not quite. And so this is creating volatility on the chart for swing traders. Tesla, we know Tesla, Elon Musk, love him or hate him, I think he's a great guy, but some people don't like the stock, heavily shorted, lots of opportunity there. It went quiet for a while, but I think it's kicking back to life. It's well worth watching. He comes out with new stuff all the time, he's releasing new stuff. You know, this is the kind of, is it going to work, isn't it going to work? And that's the same thing with a lot of these. It's very binary almost of, you know, when we get the earnings, we get the releases, it's like, oh, it's one more step towards it being a viable company. And that's quite significant because you don't get that obviously with, you know, other companies. We've got Tesla, Snapchat, a little bit of an interesting one that not many people watch because Snapchat has got a unique offering. Yes, they've been attacked by Facebook with Instagram doing similar things, and it's a specific demographic. But again, if they can get traction, if they suddenly get a boost, we start to see the share price, you know, doubling. We start to see it halving. So good volatility, regardless of your thoughts on any of these companies. You know, we're there as traders to focus on the chart, to focus on the movement that we can capture. Take a little chunk, take it, put it in our pocket, look for the next one, look for the next one. And we've got Spotify streaming music. As you know, again, revolutionizing the way we consume music. Apple Music coming in, that hit them a little bit, but they're still holding their ground. New offers coming out all the time. Again, it's all about subscribers they're putting on, the cost they're charging, all this kind of stuff, which makes it either, hey, if Apple kill them, then that's it, they're out of the game. But if they hold their ground, then we start to see the share price rallying. So we get these ups and downs, nice little swings to trade off. And then Shopify. Huge run from Shopify since it got going. E-commerce platform / software. They don't sell their own stuff, they should provide you with a platform to sell your own stuff. So on this e-commerce bandwagon, again, super strong it's been, but vulnerable. Someone comes out like Amazon and says, hey, we're putting in you know, massive amounts into software that people can use, that'll take a hit. Or they don't get the same subscriber growth, they don't get this. Again, it's the same kind of almost binary event for these. Are they going to be feasible or not? So those are 8 for you guys: Uber, Netflix, Fitbit, Twitter, Tesla, Snapchat, Spotify, and Shopify. All of those can be added to your watch list within the Core Trader 2 platform on Core Spreads Australia. Go and check them out. There's a link to them in the description below, and I'll see you in the next video. Take care. Bye-bye.